Well, another EV that's in the news right now is Tesla, with the announcement yesterday that they're planning on voting on the splitting their stocks for the second time in 2 years. Before we kind of get into that, though, for our casual listeners and, again, people who may not know, can you talk a little bit about does it mean when a stock splits?
Yeah, great question. So a stock split is basically the issuance of new shares by a company without diluting the current shareholder base. So let's say you own a share of Tesla stock and they split their stock. So what that means is that for every share, let's say they do a 2-for-1 split. For every share you own, you're now going to have 2 shares split. 3-for-1 split. For every share you have, you're going to get 3 shares. Now what that means is that the price of the stock gets halved by, divided by 2 or divided by 3, depending on the split. So the actual valuation of the company does not expand. What it simply does is it reduces the sticker price of the stock and increases the number of shares that you personally own if you are a shareholder. So that's what a stock split is. Companies do this. Historically, they've done this to increase access to their stock, for investors to access their stock. Because let's say you're Amazon at $1,000 stock, and not everybody can afford $1,000, so you do a 10-for-1 split. Now you're at $100 stock. You didn't dilute your current shareholders, but now new shareholders can come in and buy the stock at 100. So that's the whole thinking behind stock splits. That's the historical thinking behind it. Companies usually do it when managements usually approve and boards usually approve stock splits when they're very bullish on their stock. Because the reality is, as a management team, you like big stock prices. It's kind of like an ego thing. It's kind of like this, Amazon likes the fact that they have a $3,000 stock price. It's kind of a sign of worth, right? Like we put our stock up to $3,000. We're pretty good. We're pretty cool. So management teams, boards, they love big stock prices. So if they're voting to and approving a stock split to reduce that stock price, they're probably doing so on the idea that they can once again elevate the stock price back to those super high levels. So that means inherently, they're bullish on the company's growth prospects, on the prospects of the stock to once again roar back to those previous sticker price highs, so to speak. So splits are usually pretty bullish. And in fact, in data dating back to 1980, after a company does a stock split, on average, it rallies about 25% over the next 12 months versus an average gain of 9% for the S&P 500. So that's basically 2.5 times outperformance of the S&P 12 months post stock split. So stock splits aren't just theoretically bullish. Data says they are actually bullish for stocks. With respect to Tesla did a stock split in August 2020. 6 months after that stock split, the stock rallied, I think it was about 180, 190%. 6 months after that stock split. So that's historically super bullish for Tesla. They're trying to do another stock split now, second stock split in less than 2 years. Last time you had 180% rally. Usually you have a 25% rally. So you're talking about, history says Tesla stock could rattle off a 30, 40% gain here over the next 6 to 12 months based on the stock split alone. And that's pretty bullish, and we think it lines up fundamentally with what's going on in the electric vehicle space today and for the rest of 2022. So color us bullish on all EV stocks and color us cautiously bullish on Tesla stock. We do think there's some valuation concerns there that need to be warranted or that need to be examined. But beyond that, we do think that the EV space is set for some pretty big gains here in 2022.
Now, just a follow up, you said that traditionally, in theory, when a stock splits, it's to make it more accessible. Again, if it's a $1,000 stock and you're dividing it to making a $100 stock to make it more accessible. But now that people can buy fractional shares, does that still matter?
Well, not everybody can buy fractional shares, right? Not all brokerages offer fractional shares. Some do, some don't. So yes, that factor still matters in the calculus of stock splits. It matters in the calculus of dividends. I think the reason that Tesla wants to split its stock units is because they want to pay a dividend. to all its shareholders. And doing so on a greater number of shares, a smaller dividend is more feasible, more doable. So there are multiple reasons companies enact stock splits. And the primary driver historically, the accessibility thing, is still a very real thing today, though it may become less and less prevalent as fractional shares become a ubiquity in the market.
And is this something that you consider in your analysis, or is it just, again, a short-term catalyst for the next 6 months?
Yeah, I do consider it in my analysis because, again, it goes back to the idea that, to me, a stock split is a vote of confidence from the insiders. It's another form of insider buying. Less bullish than insider buying because insiders aren't actually putting their own money to work, but still bullish because of the idea that bragging rights. Management teams, members, they want big stock prices. If they're voting to reduce that stock price, it's because they believe they can get that stock price back up. So internally, I view it as a vote of confidence. That's the way I look at stock splits. They do make me bullish. I believe that this stock split from Tesla is a huge vote of confidence from Tesla management, and if the board approves from Tesla board, that Tesla can succeed and the electric vehicle sector can succeed in 2022, despite some ostensible headline risks, such as rising nickel prices, such as the war in Ukraine, such as COVID-19 lockdowns in China. Despite those ostensible headline risks, Tesla is still looking to split its stock. That's pretty bullish from our perspective. I think what that says and what it confirms is that electric vehicle makers, strong electric vehicle makers, can grow through the noise of 2022 and come out the other side with record sales, record profits, record margins, and record high stock prices. So we're really bullish on the EV sector over the next 12 months, especially considering peace talks over in Russia and Ukraine are progressing in a favorable direction, because we do believe there is going to be diplomatic, we talked about this last week, we do believe there's going to be a diplomatic resolution to that situation. If there is a diplomatic resolution to that situation, then all of a sudden these soaring commodity prices, specifically with respect to EVs, these soaring nickel prices, these soaring industrial metal prices will stop soaring and they'll start coming down. If they start coming down, you're going to remove a massive cost headwind for electric vehicles, which means that you're going to get more EV sales in 2022. So we think the headwinds are clearing up. The tailwinds remain strong. That sets the stage for EV stocks to have a pretty big 2022. We are, for the last time, bullish.
Thanks for watching HGI Clips. For the full episode, head on over to our sister channel at Hypergrowth Investing by clicking the link in the description, or listen to the podcast on any of your favorite streaming platforms. We make new episodes every Wednesday, so make sure to check it out and subscribe to never miss any of Luke's Hypergrowth insights.